A very good afternoon, investors. You're now on KleverStock with me, Wan Izul Islam, and I'll be serving you the midday roundup with the latest market updates from this morning up until now. So let's kick it off with Bursa Malaysia updates. Malaysia's benchmark index opened with a mild rebound on Tuesday after 4 straight sessions of losses. But early gains quickly faded as investors stayed cautious ahead of a crucial US Federal Reserve interest rate decision this week. Now, the FBM KLCI climbed 6.36 points to 1,619.14 at the opening bell. Yet, it slipped back within minutes to just above the previous close, signaling persistent profit-taking and wavering sentiment. Market participants remain focused on the Federal Reserve, with traders widely expecting a 25 basis point cut to the federal funds rate. Now, according to CME FedWatch, the probability of such a reduction currently stands at 87.3%, while the odds of the Fed leaving rates unchanged sit at 12.7%. Any unexpected pause or hike is feared to trigger volatility across global markets, keeping local investors on the sidelines. TA Securities said range-bound trading with a downside bias is likely to persist as investors avoid large commitments ahead of the Fed announcement. Now, the research house maintained immediate support at the 61.8% Fibonacci retracement level of 1,564, with stronger support at 1,527 and 1,490. Resistance remains at the December 2024 high of 1,644, followed by 1,684 and 1,695 as higher barriers. Rakuten Trade added that the recent downtrend on Bursa Malaysia is tied to foreign fund outflows despite the ringgit's relative stability at around 411 against the US dollar. Now, it expects the benchmark index to move within the 1,610 to 1,620 range for the day as investors await clearer cues. Among actively traded stocks today, Sunway Construction rose by 6 cents to 5 ringgit 97 cents. Sunway gained 6 cents to 5 ringgit 64 cents, and RHB Bank added 4 cents to 7 ringgit 29 cents. Clean petroleum product tanker operator Orkim Berhad made its main market debut with its shares opening flat at its IPO price of 92 cents. Now, other active counters included JS Solar, up by 1.5 cents to 30 cents, and Capital A, which inched up 1 cent to 40.5 cents. Moving on to our local currency and foreign exchange. The ringgit opened slightly weaker against the US dollar this morning as traders remained cautious ahead of the US Federal Open Market Committee FOMC meeting, which begins its 2-day session today. At around 8 a.m. this morning, the local currency stood at 4.1120 or 4.1220 against the greenback, easing from Monday's close of 4.1100 or 4.1145. Bank Muamalat Malaysia Berhad Chief Economist Muhammad Abzanizam Abdul Rashid said the firmer US dollar was evident as the US dollar index DXY inched up by 0.1% to 99.087 points ahead of the FOMC decision. He noted that US Treasury yields had also risen, reflecting increased caution among fixed income traders as they await the central bank's guidance when the meeting concludes. Now, Abzanizam said the market sentiment suggests that a 25 basis point rate cut by the Fed Reserve is widely expected, given the current labor market conditions and consumer and business sentiment. However, he did add that the interest rate path for 2026 remains uncertain, especially with the new Fed chairman who may lean towards monetary easing. At the opening bell, the ringgit slipped against the British pound to 5.4797 or 5.4930, and weakened slightly against the euro to 4.7868 or 4.7984. However, our ringgit did improve against the Japanese yen at 2.6384 or 2.6450. Within the ASEAN region, the ringgit strengthened against the Singapore dollar to 3.1687 or 3.1769. It firmed against the Thai baht to 12.8822 or 12.9224. It also slipped marginally against the Indonesian rupiah to 246.2 or 247.0 and was nearly unchanged against the Philippine peso at 697 or 7.00. Now for some local economic news. Malaysia's technology sector continued to accelerate in 2025, and that was fueled by rapid advances in artificial intelligence (AI), an unprecedented surge in data center development, and strategic positioning amid intensifying US-China tech rivalry. Now, Penang and Johor remain the country's dominant technology hubs, with Penang strengthening its reputation as Malaysia's Silicon Valley through its robust semiconductor ecosystem, while Johor emerged as one of Southeast Asia's fastest growing data center clusters as Singapore's digital spillover intensified. Now, the strong momentum was supported by government incentives, public-private partnerships, and increasing confidence from global technology giants, all of which helped reinforce Malaysia's standing on the regional technology map. Now, initiatives under the Malaysia Digital Economy Blueprint, My Digital, combined with rising investments in cloud computing and AI, continue to strengthen the sector. Prime Minister Datuk Seri Anwar Ibrahim said foreign and domestic companies have benefited from tax incentives and R&D support designed to nurture local talent and encourage industry-wide collaboration to drive innovation and operational efficiency. Now, in the first half of 2025, approved AI-related investments reached 13.29 billion ringgit, while the data center and cloud computing segment contributed 30.95 billion ringgit to total digital investments. According to the Malaysian Investment Development Authority, MIDA, Malaysia secured 190.3 billion ringgit in approved investments across all sectors in the first half of 2025, which is an 18.7% increase compared with the same period in 2024. Of this amount, 88.3 billion ringgit or 46.4% fell under the National Investment Aspirations or NIA priority sectors, including advanced technology, digitalization and green growth. Now, between the years 2021 and June 30th, 2025, Malaysia approved 143 data center projects that was valued at 144.4 billion ringgit, creating 1,429 jobs, including 25 Malaysia Digital Status facilities under the Digital Ecosystem Acceleration Scheme. Still on local news updates, Malaysia's rubber industry, which generates over 33 billion ringgit in export revenue annually, is poised for stronger growth next year as global demand for high-value rubber products continues to rise. Now, industry players expect technical rubber products and medical gloves to expand by as much as 10% in 2026, supported by improved market conditions and also Malaysia's long-standing expertise in downstream manufacturing. Now, rubber expert Dennis Lau said Malaysia's position in the global rubber value chain remains solid, strengthened by its transformation for a raw material supplier into a major producer of high-quality, value-added products ranging from medical gloves, condoms, to technical rubber components and latex mattresses. Now, Lau told, "We believe that growth of about 8 to 10% is possible in technical rubber products and in the medical glove industries." He also noted that demand has normalized after COVID-19 surge, but remains steady across the healthcare and manufacturing sectors. Mr. Lau also added that Malaysia's rubber development efforts continue to advance through research programs led by the Malaysian Rubber Board (MRB), which focuses on boosting productivity and enhancing technology adoption across the industry. Now, Plantation and Commodities Minister Datuk Seri Johari Abdul Ghani, he said that Malaysia's strong R&D capabilities remain the backbone of its export performance, even as the country increasingly depends on imported natural rubber due to declining domestic production. Malaysia now imports around 7.5 billion ringgit worth of natural rubber annually. Even though we have limited natural rubber, our R&D capabilities are recognized worldwide because of the strength of our midstream and downstream technology. We are able to achieve exports of over 33 billion ringgit. That was said by Johari at the 100 Years of Rubber Research celebration organized by MRB. Since its inception, MRB has commercialized more than 200 R&D technologies and registered 394 patents spanning innovations across the entire value chain. And these advancements have helped Malaysia navigate challenges such as disease outbreaks, low yields, volatile prices, and shifts in global demand. We now head into some corporate news updates. Orkim Berhad made a quiet entrance on the main market of Malaysia, Bursa Malaysia today, debuting at its initial public offering or IPO price of 92 cents amid a cautious trading environment. Now, the oil and gas shipping company, previously wholly owned by private equity firm Equity National Berhad, also known as Equinas, began its first day of trade with a market capitalization of 920 million ringgit, but saw little immediate movement as investors adopted a wait-and-see approach. Now, its subdued start mirrors the broader sentiment across regional markets, where participants remain defensive while monitoring economic indicators, interest rate trajectories, and ongoing geopolitical tensions. Now, despite the muted debut, analysts believe the timing of Orkim's listing is favorable, given the resilient demand for clean petroleum product, transportation, and Malaysia's push to enhance its maritime logistics capacity. Now, Orkim operates on one of the country's largest fleets of clean petroleum tankers, and its business fundamentals are expected to draw stronger investor interest once trading normalizes and confidence improves. The company is positioned to benefit from steady charter rates and structural demand in the downstream oil and gas logistics sector, which continues to expand in line with national energy and supply chain requirements. While the stock's first day performance did not deliver an immediate boost, market observers note that the company's long-term prospects remain intact, with the listing providing fresh visibility and growth avenues as Malaysia strengthens its role in regional maritime transport. Up next, we have some business updates. Vasco Berhad's near-term prospects remain robust, as the company is set to benefit from rising capital expenditure in deep water and liquefied natural gas (LNG) projects. Now, along with growing opportunities, of course, in the energy transition sector. Hong Leong Investment Bank Berhad highlighted that Vasco's engineering and fabrication division, noting that 7 floating production storage and offloading FPSO projects are currently out for tender across Malaysia, South America, and Africa. Given its existing yard capacity and modular fabrication capabilities, Vasco is well positioned to secure 1 or 2 additional FPSO module packages. Hong Leong Investment Bank noted that the shallow water Sepat field redevelopment offshore Kuala Terengganu is likely to be awarded to Singapore-based Ocean Star Elite, which implies that T7 Global, MISC, and MTC Engineering may no longer be in contention. Now, since Vasco's bid was tied to one of the companies that fell out, it is not expected to secure any fabrication scope for the Sepat FPSO project. Now, the Kikeh Field FPSO project remains in the bidding stage, with Vasco's partnering contractor yet to be confirmed. Now, following the recent award for pre-assembled process modules from Technip Energies Italy, Vasco's consolidated ordered book has increased from 3.2 billion to 3.4 billion ringgit. Now, its tender book remains strong at 14.2 billion ringgit, surpassing pre-pandemic levels, and is expected to stay above 3 billion ringgit throughout the 2026 financial year. That's supported primarily by sustained momentum in the engineering and fabrication division. Hong Leong Investment Bank maintained its earnings forecast for Vasco and reaffirmed a buy call with an unchanged target price of 1 ringgit 49 cents. And finally, ladies and gentlemen, we have the major corporate developments and deals across Malaysia. Here are some of the major headlines. At number 1, MISC Berhad. They've secured a contract with Petronas Karigali Brunei Limited to lease, operate and maintain a floating production unit for a natural gas development project in Brunei. Our next headline at number 2, Sime Darby Property Berhad and Maidin Mohammed Holdings Berhad have broken ground on the 450 million fully automated distribution center in the city of Elmina, marking a major expansion of Malaysia's logistics infrastructure. At number 3, Perak Transit Berhad has proposed to establish a 1.5 billion ringgit Sukuk Wakalah program to fund its working capital and capital expenditure, as well as other Sharia-compliant corporate purposes. Here's an interesting one at number 4, XOX Technology Berhad. They're changing their name now to Nova Technology Services Berhad, effective December 9th, which is today, and its securities will be traded and quoted under the new name and new stock short name of Nova Tech. Our next headline at number 5, Quality Concrete Holdings Berhad's subsidiary, QC Construction and Engineering Sdn Berhad, has accepted a contract award from the Regional Corridor Development Authority for works worth about 91.5 million ringgit. Number 6, JAG Capital Holdings Berhad, controlled by Plantation and Commodities Minister Datuk Seri Johari Abdul Ghani, has raised its stake in MyNews Holdings Berhad to about 20% versus a little under 14% before the latest trades. And that is a wrap-up for the Midday Roundup with me, Wanizul Islam, right here on KleverStock. Thank you so much for choosing us, investors. Stay tuned for our upcoming live stream programs. Have a wonderful Tuesday ahead, and we'll see you soon.